The Sensex or sensitive index was introduced by Bombay Stock Exchange on 1 January 1986. It is one of the prominent stock market indexes in India. The Sensex is designed to reflect the overall market sentiments. It comprises of 30 stocks. These are large, well-established and financially sound companies from main sectors. The method adopted for calculating Sensex is the market capitalization weighted method, in which weights are assigned according to the size of the company. Larger the size, higher the weightage. The base year of Sensex is 1978 to 1979, and the best index value is set to 100 for that period. The total value of shares in the market at the time of index construction is assumed to be 100 in terms of points. This is for the purpose of ease of calculation and to logically represent the change in terms of percentage. So next day, if the market capitalization moves up 10%, the index also moves 10% to 110. What we said was the general method to construct indices. Since the Sensex consists of 30 large companies and since its shares may be held by the government or promoters, for the purpose of calculating market capitalization only, the free float market value is considered instead of the total number of shares. To know what is free float, I suggest you to watch the next part of this series. We will surely bring the videos on the updates of the stock market on this channel. So if you have not subscribed it yet, then do it now for the regular new updates on the stock market and use it to have a wonderful future. All the best guys. This is Anand Cholkar.